Hi, this is Supriyo. So today we are going to look at the types of banks in India, and also we are going to take a deep look into the types of banking in India. A slight difference, but let's directly jump in and not waste any time. So the types of banks in India, what are the different types of banks? So primarily, firstly, just remember the definition of the scheduled commercial bank. So we have talked a little bit about this in the earlier sessions, but remember that the SCBs, they are included in the second schedule of the RBI Act 1934. So that is why they are called the scheduled commercial bank. Very important definition, and mostly for most of the examinations, this first line, this will be the only thing that is going to be important. And there is also another clause, the minimum paid up capital and reserves need to be at least 25 lakh rupees. But this actually you don't need to remember that much, because mostly in the current examinations this clause is not being asked. And the reason for this is that RBI has actually started something called the on tap banking license. So the on tap banking license, for that to get a license and create your own private bank, you need to have a capital of 500 crore. So 500 crore is the current capital that you require, and that is why this thing is right now not that much valid. You can just make a note of it for historical reasons. And now the detailed activities for a scheduled commercial bank, it must be submitted to the Reserve Bank of India weekly. So lot of different things must be done. For example, the cash reserve ratio, the statutory liquidity ratio, and all the various compliances that the Reserve Bank wants from these banks, they have to meet. And now they also need to work in the interest of the depositors. This is very important, that all the SCBs, they must ensure that the depositor interests are actually protected. So this is very important. And then coming to the non-scheduled banks. So in the non-scheduled banks, just remember, very important, that they are of course not in the second schedule of the Reserve Bank of India. That is a no-brainer. And also they cannot avail the repo operations, the repurchase agreement operations. So the short-term loans that the Reserve Bank of India gives to the scheduled commercial banks for their liquidity mismatches, that kind of thing cannot be taken by the non-scheduled banks. So that is very important to remember, and of course they are not included in the second schedule. So now let us take a look at the overall structure of the banks in India. So here we are with the overall structure. So at the top of the food chain, you have the regulators. Now who are the regulators? So RBI, Reserve Bank of India, they are regulating all the banks in India. Then you also have the SEBI regulations. So they are the regulator for the capital markets and some part of the money market as well. Then you have the NABARD, the bank which actually regulates all the agricultural and the rural development stuff. And then you have the IRDAI. So they are regulating all the insurances. And since we have right now, banks can also sell insurances. So as you know, we have a term for it. It is called bank assurance. So that is why the IRDAI also comes into the picture. And then you have the PFRDA, and these are the most important ones. There is also the NHB and different other regulators, but just remember that they are the top level. That's the most important thing. And after the regulators, the next level, it has scheduled banks and also non-scheduled banks. So right now we just took a look at the differences between the scheduled banks and the non-scheduled banks. That's what you need to remember. And now coming to the non-scheduled banks, if we see what are the types of the non-scheduled banks, we have non-scheduled cooperative banks. So cooperative banks we are going to look at just a little bit later, so leave it for now. Then you have the payments banks, the small finance banks, and the local area banks. So the payments banks and the small finance banks, these two are very important because they are differentiated banks, what we call. We are going to take a look at them in the next sessions. So just remember that they are part of the non-scheduled banks. So they are in this part. So that's what you need to remember. And also the local area banks, which are having their presence in a particular location. And the scheduled commercial banks, what's the divisions under that? We have commercial banks and also the scheduled cooperative banks. So as I told you, cooperative banks we are going to look at. Just remember, there are scheduled cooperative banks as well as non-scheduled cooperative banks. So we are just going to look at the structure a little later. And the commercial banks, what are the different types of commercial banks? We have, of course, the public sector banks. So we talked a lot about the PSBs, the public sector banks. 51% is owned by the government. And in the public sector banks, you have nationalized banks and banks which were not nationalized but which from their inception were under government control. So we have talked all about these things in our previous videos, and you can just check them if you want. So that's all about the public sector banks. And then you have the private banks. So the private banks, remember, they are actually held by the private entities. And one thing in this regard I must tell you is that what is the FDI limit? So what is the FDI limit in the private banks? It is 74%. So any foreign investor, they can invest in any Indian private sector bank up to 74%. And this is quite interesting to note. I don't know if you know this, but all these big banks that we see, the HDFC Bank, the Axis Bank, etc., we can actually say that they are foreign banks because the holding structure is such that a lot of foreign investors have poured their money into it, and majority of those private sector banks are actually owned by foreign entities. This is a very interesting fact, and okay, someday we are going to elaborate on that, not so much relevant right now. And of course we have both the new generation and the old generation private sector banks. So the new generation, they are the ones which were formed since 1993. So we have so many banks like the HDFC Bank, Axis Bank, then we have the IndusInd Bank, and all the different kinds of banks that happened after that. So the Yes Bank, the Bandhan Bank, all those different banks, they are all classified as new generation private sector banks. And the old generation banks, so we already have the banks like the Karnataka Bank, the Federal Bank, and all the different banks that were actually had their inception before the 90s. So they were the old generation private sector banks. And remember, we have talked about nationalization already. Those banks were not nationalized. So that's the difference between new generation and the old generation. And then you have the foreign banks. So who are the foreign banks in India? Foreign banks are banks whose headquarters are outside of India, but they have branches in India and they are having banking presence in India. So for example, you have the Citibank, you have the Standard Chartered, you have the Deutsche Bank, and etc., and all the different kinds of foreign banks that operate in India. And so that is the foreign banks. They are also classified under this. And then you have the regional rural banks, the RRBs. We have talked a little bit about this, and later on in this video we are going to talk about this. So this is the entire structure of the Indian banking industry. So these are the types of banks that are operating in our nation as of now. And now let us take a look into the cooperative banks and the regional rural banks. First, let us start with cooperative banks. So cooperative banks, cooperation, that's the word from which this word has actually come. And what does cooperation actually mean? This means that a lot of people, they are together trying to just help each other. So this cooperative bank movement, this actually began at the end of the 19th century in Britain, and it also began in Germany. And in those countries, they actually had a lot of people at the grassroots level of society come together to create a bank. And that is the exact system that we have taken, and we have created our cooperative banking system. So the members of the cooperative banks, they are both the customers and also the owners of the bank. So this is very important to understand that cooperative banks, they are just owned together by the people who are customers in the bank, and they are also called the owners of the bank for this very reason. And these banks, they actually evolved from cooperative societies where members would be there, they would be pooling their money, and then when any member would require any kind of loan, they would give that loan to that member. So that is the exact thing from which the cooperative banking originated, and that is why the cooperative banks, they are registered under the Cooperative Societies Act of 1912. And now we have actually a unique system in India by which we have dual regulation of the cooperative banks. So the Reserve Bank of India, they are regulating, so they are one party, and the second party is the state government. So each and every state government, they have different kinds of cooperative credit society acts, and they actually regulate these cooperative banks differently. And this had actually recently caused a lot of problems in the PMC bank crisis, the Punjab and Maharashtra cooperative bank crisis. As you might remember that in that crisis, what had happened, they had actually, this bank, it had loaned a lot of its money to a company called HDIL. So 73% of the money of this bank was actually lent to HDIL, and when HDIL failed, then the bank also failed, and it had actually created a huge problem in the cooperative banking system of India. And after that, a lot of changes have occurred. Just remember that the Cooperative Banks of India, they are actually regulated by the Banking Regulation Act 1949, the Banking Laws Application to Cooperative Societies Act 1965, and the Multi-State Cooperative Societies Act of 2002. And this act, the last act, it is actually only for the cooperative banks which are in different states. So we are just going to look at it. Just remember that this dual regulation that I told you, that was the main problem, and because of that, recently what Indian government has done, they have actually made some amendments in the Banking Regulation Act, by which what you can do, you can now raise capital for the cooperative banks, you can just amalgamate these banks, you can also close down the banks, and a lot of authority has been given to the Reserve Bank of India. So they have tried to put all the powers of especially the urban cooperative banks into the Reserve Bank of India's hands. So first let's look into the structure, then you will understand how the cooperative banks are actually working. So this is the structure, the current structure in India. So at the top you have the cooperative banks in India. You have two types mainly. So the first thing, the urban cooperative banks. So these are called UCBs, and also sometimes they are called what? They are called PCBs, the primary cooperative banks. So this is the nomenclature of that, urban cooperative banks, and these are mostly in the urban areas or the semi-urban areas, and they are just a little bit more developed. And then you have the rural cooperative banks. So rural cooperative banks are a totally different kind of arrangement, and this is the primary kind of difference. So UCBs and RCBs we call it, and this UCB, the urban cooperative banks, they are also different types. So there are scheduled urban cooperative banks and non-scheduled urban cooperative banks. So the scheduled urban cooperative banks, these are the banks which are listed under the second schedule of the Reserve Bank of India Act that we were earlier talking about. And remember that these banks, they can be multi-state or they can be single state. Similarly here also the non-scheduled UCBs, they can be multi-state or they can be single state. So as I told you about that, the different multi-state societies act of 2002, they are going to actually come under if they are operating in more than one state. So this is very possible that urban cooperative bank is actually operating in more than one state. So remember that, it's very important to note. And now on the rural cooperative bank side, so we have short term and long term rural cooperative banks, and in the short term, this is very important, the short term rural cooperative banks. So first you must remember that at the top level, at the state level, we have the state cooperative banks. So these are also called SCBs. Don't be just confused between the SCB, which is the scheduled commercial bank, and the state cooperative banks. So this the SCB, the state cooperative bank, it is actually heading the state level of the cooperative banking system of the rural cooperative banks. And then you have the district central cooperative banks, the DCCBs. Sometimes these banks, they are called central cooperative banks. Remember this, because sometimes people can confuse you by saying central, but this central thing, it is actually at the district level. So the state cooperative banks, they are at the state level, and the central cooperative banks, it is at the district level. So it is called the district central cooperative banks. So that is the second tier. And the third tier, it is the primary agricultural credit societies, or the PACS. Now this is actually at the village level, and mostly RBI does not look into these kinds of things, but they are also very important for financial inclusion, and so that each and every villager can get access to credit. So PACS is at the bottom level, village level, district central cooperative bank at the district level, and this one is at the state level. So that is the hierarchy of the short term rural cooperative banks. And then you have the long term rural cooperative banks. There are SCARDBs and the PCARDBs. So what are the full forms of these? So SCARDBs, it is called the state cooperative agriculture and rural development banks, and the PCARDBs, it is the primary cooperative agriculture rural development banks. So it's quite a mouthful, just remember the full forms and that will be enough. So these are the entire structures that we have for the cooperative banking system in India. Very important that you understand the structure. That is where you get some questions from. The next part, let us look into it. So we have the RRB, the regional rural banks. So for the RRBs, we have already talked about it a little bit in our earlier videos. Remember that it was set up on 2nd October 1975, so Gandhi Jayanti of 1975, and the Narasimhan committee had actually recommended the regional rural banks in India. So that is very important. And the father of RRBs, this question sometimes has come, so it is M.S. Swaminathan. Very important to understand that M.S. Swaminathan, he is also the father of the Green Revolution in India. That I hope that you all know. And this M.S. Swaminathan, when he was actually going throughout the country and he was trying to uplift the farmers and help them to accept this revolution, then he had found out that lack of credit was a problem, and he had actually instructed the government. The government then formed the Narasimhan committee, and finally they had the recommendations, and the RRBs were actually born. And also remember the first RRB, we have already talked about it. It is the Prathama Gramin Bank. It was in Uttar Pradesh. So we have already talked about it. I hope that you remember it from our discussions. And now also the shareholding, it is also very, very important. So for the regional rural banks, the shareholding, the government of India has 50% shareholding, then the sponsor bank has 35%. Very important, because each and every RRB, it is sponsored by one of the banks, and since RRBs are operating at the very bottom tier, so they are helping in the financial awareness, they are helping in the financial inclusion on the village level. That is why the sponsor bank is very important. So each RRB, they have a sponsor bank, and 35% is owned by that bank. And then the state government also has a stake. They have 15% stake. So this shareholding, it is as per the RRB Act of 1976. Very important to remember the act as well. And also remember that in 2015 we had some amendments to this act. So one of the very important amendment that we had, it was actually that all this shareholding that you see, so the RRBs, they were not able to access capital from outside, right? So in 2015, after the amendment, what actually happened, this act was amended, and the RRBs were said that okay, you can now get access for capital from outside as well. But there was a clause that 51% of the shareholding must be with the center and the sponsor bank. So the summation of the shareholding of Government of India and sponsor bank, that cannot fall below 51%. This is very important to remember, and that was the main amendment. And also they had amended and just made the financial year same as our normal financial year, which is from April to March, and that was the main changes that had been done by this amendment. So remember all the amendments. And at this stage also, I have a question for you. Can you tell me in the comments which is the latest private bank of India? It's a very interesting question. Which is the latest private bank of India? Now let us move to the next section, the types of banking that we have. So understand the difference between type of banks and the type of banking. So type of banks is the actual structure that we have in India, and types of banking, these questions are also very common in your IBPS examinations or SBI examinations, because the type of banking is also very conceptual and you must remember all of these things. So the first type, it is the core banking. So what does core banking actually mean? So core, the full form of CORE, it is centralized online real-time exchange. So core banking, we can call it as CBS. So core banking solutions, it is called in the bank. So there is a centralized system by which each and every branch of the bank can actually talk with each other, and that is what core banking means. Earlier what used to happen, we had some ledgers, some big files that used to be maintained, and the customer could only bank in one branch. But now the branch banking is actually essentially going away, and we have a centralized system, and there is a software which actually connects each and every branch, and that is what we have, the core banking. And the second one, we have retail banking. So retail banking is also called consumer banking, and it is all the normal banking activities that we engage in. So if we go for a housing loan, if we go for just a personal loan to the bank, and all the various kinds of activities when we are just putting our deposits in the bank and we are taking cash from the bank, all those things come under the retail banking. So retail banking is just banking for the common person. Wholesale banking, this is the opposite of the retail banking. So wholesale banking, they will be having huge money conversions, big clients will be there, and wholesale banking, we have a term called HNIs. So HNIs, they are the high net worth individuals and those rich people who actually want to just get into the bank and they don't want their time wasted and they have so many different needs as well. So the bank decided that wholesale banking will be catering towards the HNIs. There is also another term that is sometimes used, that is called wealth management. So wealth management is also offered to the clients, the premium clients of the bank, and wholesale banking covers it. Then we have narrow banking. So what is narrow banking? Just think about it. Narrow banking is also called risk-free banking. So there is no risk in the narrow banking. So narrow banking, most of the investments that the bank does in narrow banking, they are in government securities. So in government securities, they are going to put all their money and they are going to park their money in the safe instruments. They give you just less return, but the return is stable, right? So narrow banking is all about risk-free and normal activities so that the capital can be preserved. Then we have the para banking. So para banking, this actually refers to all the utility services that are actually provided by the bank, and para banking just an additional kind of banking. So for example, when a bank is actually selling you insurance, when a bank is actually selling you mutual funds and all those other kinds of things which are not pure banking, but they are just the para banking or the other parts of banking. So these kinds of things, for example, we talked at the beginning of the session about bank assurance, all those things come under para banking. So remember that term, it's very important and many times questions have been formed for it. And then we have the universal banking. So universal banking, what is it? It was actually based on the recommendations of the H.R. Khan committee. So remember the committee name. And universal banking, it is actually a recent concept. So in that type of banking, they want all types of banking into that one particular bank. So retail banking, wholesale banking, narrow banking, para banking, and all the different kinds of banking things. So all the different investments, giving loans, and all the other activities, they are just clubbing together into universal banking. So universal bank is a bank that performs all the activities that a bank can actually perform. So that is all about universal banking. Now we come to offshore banking and overseas banking. So both of these things are a little bit different. So offshore banking, this actually means that you have your branch in a different kind of setup inside a country. So for example, there is something called an SEZ, which is a special economic zone. So if a bank, so for example, if State Bank of India has a branch in a SEZ, then this branch is actually called an OBU, or offshore banking unit. So OBUs, it's very important for offshore for the SEZs. And what was the first SEZ of India? It was at Kandla in Gujarat, and now we have the gift city. So the Gujarat International Finance Tech City, it's very important, and there we have a lot of OBUs, the offshore banking units, and various international clients, they can get access to the Indian market by using the offshore banking outlets. So it's very important. And then you have overseas banking. So overseas banking, this means that an Indian bank, for example, State Bank of India is opening a branch in some foreign country. So for example, SBI has a branch in New York. So that branch is called an overseas branch of SBI. Then you have something similar called the correspondent banking. So how is it different? It's just a slightly different concept. So correspondent banking means that your Bank of India, they are not opening a branch outside, but they are tying up with a particular agent. So this is a agent principal kind of relationship. So they say that, okay, for example, Bank of America is my agent in this city, and if there is an Indian living in that city, he can access all of my activities of that Indian bank through this Bank of America. So Bank of America is the correspondent bank. So this is the correspondent banking system that we use. And then we have the green banking. So green banking is all the paperless banking. So for example, you go to a ATM, you pick up the cash, but you are not taking all those paper slips, you are not taking. And also you are not taking a lot of cash, but doing the digital transactions. So that is called green banking. So it is a very environmentally friendly kind of banking system. Okay, so let's move to the next parts of the types of banking. So then we have the relationship banking. This is very important for private banks of India. So in HDFC, Axis Bank, and all the other private banks, you will be finding a relationship manager. It is called called an RM. So what that RM does, they are going to talk with you, they are going to give you great service, they are going to come to your home, and slowly they are going to build up that relationship. So it is based on relationship. So this person is going to become almost like your friend, and then they are going to sell you all the different kinds of services. So it can be a little insidious, because that person will appear to be your friend, but actually they are doing that just to get business from you. So that is what most private banks do. And then you have the online banking and the virtual banking. Both of these things are the same thing. So net banking, the different apps that we use, the remittance services, the transaction services online that we use, all these things come under online banking. So you do not have any physical presence. If physical presence is not required, and online you are going to do all the things. So you have a DBS bank called in India. So DBS bank was one of the first banks that actually had started this online banking just journey into India. And then you have the unit banking. So this type of banking, it is actually mostly prevalent in USA. So they have only one unit, and from that one unit they are doing all kinds of things. So all kinds of transactions, all kinds of things that you need in a bank, they are doing it from only one branch or one outlet, and that is called unit banking. Next we have shadow banking or quasi banking. Both of these things mainly mean the same thing. They are just talking about NBFCs. So whatever NBFCs are doing, they can be called as shadow banking or quasi banking, because mostly NBFCs are doing same things that a bank is doing, but they do not have permission to do all the different activities, and that is why they are called shadow banks. Now shadow banking is actually an international term. In India, the NBFCs are well regulated, so we cannot technically call them shadow banks, but still just because internationally it is said, that's why we say. So both of these things, they are talking about the NBFCs. Then you have the investment banking and the merchant banking. So both of these things are mostly similar, but investment banking is a bit more in depth, because investment banking, it talks about the underwriting, the mergers and acquisitions, and big companies are actually helped by the investment banking. But in the merchant banking, they have a little less size of their customers, and these banks, the merchant banks, they are mainly doing the currency conversions and all the other kinds of things, and sometimes it is semantic. So in America it is called a lot investment banking, while in parts of Europe it is called merchant banking. But both of these things are very well correlated together, and both of these banks are doing all those high level functions. And then you have Islamic banking. This is also very important. So in Islam there is a Sharia law, and in this Sharia law they say that interest is haram. So you cannot take interest. So this deposit interest, the loan interest, it cannot be taken, and because of that a different branch of banking has actually been set up. So recently it was given clearance in India as well, and you might think that how they actually profit if they do not have any interest concept. So what they do, they will be just investing in some businesses, and they will be sharing the profits. So they do not call it interest, but they still can earn money. So that is the Islamic banking. Then you have the concept of chain banking. So chain banking means that there is one individual and he is owning all of the different banks in the marketplace. So bank A, bank B, bank C, bank D, all these banks are different banks. Remember, this is not bank branch that I am talking about, different banks. So imagine if HDFC, Axis Bank, they were all owned by one entity. So that is the concept of chain banking, and China usually follows a chain banking model, and also Swiss banks, they have some chain banking models actually taking place. And finally, the final thing is the social banking. So by the name only you can understand that it actually just deals with the different kinds of financial inclusion kinds of things, and the people are actually just reaching the grassroots by this kind of banking arrangement. So that ends our types of banking. I hope that you learned something from this video and that it was beneficial to you. If you enjoyed this video, please leave a like and share it with your friends. And if you want to see more of this kind of content and you want to see this banking awareness series that is continuing, then please click on the subscribe button and do not forget to click the bell icon so that you, my friend, do not miss any future update. I'll see you in the next part. Bye bye.